The dollar's value basically depends on the faith and credit of the US government. Damn right it does. That's all it is. You take away gold, if you don't swap it for gold on demand, then that's all it is. The faith in the credit of the US government. Do you have faith and are you prepared to credit the US government? But you don't escape this credit problem. You are bound up in it. There is no escape. The only escape is to own physical gold or physical silver, but particularly physical gold.
Gold prices have continued to break out, and yesterday, they marked a fresh all-time high for the yellow metal. It's been a brisk move over the past 3 weeks from when gold was previously testing a key spot of support while threatening a deeper breakdown. Early in the quarter, the gold breakout rushed up to a fresh all-time high, but bulls were unable to hold the move above the $2,400 level. At this point, it seems that buyers have finally gained acceptance above the $2,400 level, and they've already made a fast run toward the next big figure, the major psychological level of $2,500. Meanwhile, the dollar index, which gauges the greenback's strength against a basket of 6 currencies, showed signs of weakening. Alasdair Macleod believes that the general perception is that gold is rising, but in reality, it's the fiat currencies that are declining. He emphasizes this point, saying, "The people who will protect themselves from the multiple crises that are now in view are those who understand that it's the paper currencies going down, not gold rising." In the broader context, the US dollar is facing its own challenges. With the Federal Reserve under pressure to raise interest rates amidst rising inflation and deteriorating government finances, the dollar's purchasing power is declining. Furthermore, Zimbabwe's new central bank governor, John Mushiavanhu, is building up the nation's gold reserves to help support the ZiG currency, taking steps that have so far helped curb exchange rate volatility and an inflation spiral. Macleod doesn't know which crisis will hit first, but asserts that it's all there and it will determine the timing. He states, "The only escape is to own physical gold or physical silver, but particularly physical gold." Before we jump into more content, consider subscribing and enabling notifications to stay updated with our latest uploads.
Everybody thinks it's gold rising, but actually it's fiat currencies declining. And I'm trying to ram that message home because the people who will protect themselves from the multiple crises that are now in view, they're the people who actually understand that it's the paper currencies going down, not gold rising. And it's really for that reason that, when people ask me, what's your target for gold or silver, I don't give one. The question should be phrased, how far do you see the dollar going down or euro going down or whatever your favorite currency is? And the answer to that, I'm afraid, is I think they're all on their way to zero. The question is, how long will it take to get there? That depends, I think, on how events unfold. I mean, we've got a potential war in the Ukraine and also in the Middle East, which could end up with being nuclear. Obviously, it's goodbye everybody if we go down that route. There is also the fact that the US dollar is in a debt trap, and there seems to be absolutely no recognition in the political class of the importance of that position, and they're still spending like Billio. The excuse is, and it's election year, and we got to get re-elected. And on top of that, we've drifted into socialism in Europe with France and now the UK. That's going to bring on financial disasters for both the euro and also sterling. And you can see that the Bank of Japan is suppressing interest rates at the zero bound. They're still zero. They're determined not to raise them. But I think the biggest problem, which everybody is getting wrong, and I mean virtually everybody, is the outlook on interest rates. They think that interest rates are going to fall. They're not. They might come down a touch because central banks actually don't understand the role of interest rates. And also they're under huge pressure from markets to reduce interest rates. Also, they're under pressure to if you like, alleviate the problems in the banking system, which undoubtedly are exacerbated by current interest rates. I mean, look at the commercial real estate situation in America, for example. You've got zombie companies who cannot afford interest rates at this level, and they're gradually having to refinance themselves from the lower rates to which they became used. These are all disasters coming up, and I don't know which one's going to hit the fan first. I mean, nobody does, but it's all there. It is all there, and that will give you your timing. Everything is credit, right? Now, what happens when that collapses? Everything goes, absolutely everything goes, without fear or favour. You're going to lose. And also when it comes to property, incidentally, how do you value property? You value it in credit. So valuing property in credit, you don't escape the idea that you actually own bricks and mortar and all the rest of it. You don't escape this credit problem. You are bound up in it. There is no escape. The only escape is to own physical gold or physical silver, but particularly physical gold. And if you expect a collapse, let us say, in the dollar or whatever your domestic currency is, then everything in the economy is going to go tits up. So I'm afraid that is the reality of a collapse in credit. And people just don't understand this.
The silver market is experiencing significant manipulation due to its dual role as both an industrial metal and an investment commodity. As of mid-July 2024, the global silver deficit is expected to rise by 17%, reaching 215.3 million ounces. This increase is primarily driven by a 2% growth in industrial demand, coupled with a 1% decline in supply, according to the Silver Institute. Silver has been up 33% year-to-date, gold has been up 15.8%, and copper has gained 19.1%. Prices of silver are seen firming up over the next year or so, on account of the growing demand as an industrial metal. Macleod highlighted a persistent deficit in silver supply compared to demand, which has been ongoing for nearly 4 years. Macleod believes China has been strategically accumulating silver, controlling the price to build up its reserves. He elaborated that gold, silver, and copper are legally recognized as money, or the money of last resort, while everything else is considered credit. Let's now turn our attention to the video again.
Money, if you like, without counterparty risk was gold, silver, and copper. I mean, it's as simple as that. Now, obviously, we think in terms of gold. Silver is not priced as a monetary metal because if it was, then we would be looking at the sort of relationship to gold that pertained in the 1870s, or up until the 1870s, when there was about sort of 15 to 1 ratio. Obviously, we're now looking at 76 to 1 ratio. It is not being priced as a monetary metal. There is no doubt, however, I mean, you just look at the Silver Institute's estimates of supply and demand. I mean, there's been a deficit in terms of the sum of mine and scrap supply compared with demand. And that's a deficit which has been around now for nearly 4 years and is only satisfied by drawing down on silver stocks, above ground stocks, which predominantly are either held in investment hands or alternatively are held as strategic stocks. Now, strategic stocks were extremely common back in the old days. I mean, we're going back to the days when Bretton Woods was around. But it's not so common now, with one notable exception, and that's China. China has accumulated quite a lot of silver. I haven't been tracking that too much, but I do know that they have, in effect, been controlling the price with a view to accumulating stocks of silver. And the way in which industrial demand for silver has gone, explains that it was a perfectly rational thing for the Chinese to do. I saw someone the other day suggesting that a large seller might dump silver on the market to screw the price. I think that's extremely unlikely. It's too precious a commodity, an industrial commodity, for anyone to consider doing that, because they know they would just lose control over their silver. why do it? So that's not going to happen. The fascinating thing is that virtually everybody dealing in gold doesn't actually understand the monetary status of gold, but actually they don't understand the legal position that gold is money and the rest is credit. This is the way it was described by J.P. Morgan back in 2012 to a committee of Congress. It's still true today. And this is actually based on Roman law, which goes all the way back to the 12 tables in 450 BC, formalized by jurors over the next 1,000 years, and then crystallized in Justinian's pandemics, and also the Basilica for the Eastern European Empire, and that was about 900 and something AD. So, and all the successor nations from the Roman Empire, which actually happened to colonize the world, have this in their common law, that gold, silver, and copper are actually money, or can operate as money. They are the money of last resort. Everything else is credit, whatever.
De-dollarization by countries at odds with the United States, who fear that the U.S. could freeze their dollar assets like Washington did to Russia following the invasion of Ukraine, is increasing the appeal of gold as a foreign exchange alternative. BRICS nations, now wealthier than the G7 and accounting for 1/3 of the world's GDP, are reportedly discussing the launch of a BRICS cryptocurrency, potentially backed by gold. A recent report from the World Gold Council sees climate change as another source of safe haven gold demand. On the other hand, white metals also come in the same race. Higher industrial demand for silver comes from its use in solar panels, EVs, and even 5G technology. China alone accounts for 90% of global panel shipments. Could 2024 witness a perfect storm of higher prices in commodities? We want to hear from you. Feel free to leave your thoughts in the comments, give a thumbs up if you liked what you saw, and subscribe to stay connected with our ongoing exploration.